What's happening is just defining any logic, and we are going to speak about real estate, about economy, about uncertainty, and what the heck is going on right now and where we are going forward.
What's going on exactly?
It's actually sometimes better to enter something new when it's difficult, because then you have many options which didn't exist before. Things start breaking. They're breaking apart, and you have more pieces of Lego to put this together. We want to focus on what's up with the GTA of real estate. And ultimately, a lot of people and of course, a lot of professionals at the back of their minds are thinking, is it a good time to buy? Is it a good time to actually exit the market? Well, homes are in a bubble, clearly, because look at the prices of condos. What's happening with condos? They're losing value day by day. And with the office spaces dead, and all professionals now forever will be working remote, or mostly downtown becoming a ghost town. So what the heck is going on and going to happen?
Mm-hmm. I get those questions every day.
Exactly. Moreover, I get these questions quite often because of my exposure. So first and foremost, I wanted to introduce Frank. And Frank is a broker and SVP of sales with Salisbury International Realty. Frank, how did you come to work in real estate? What brought you here and what keeps you here?
That's a good question, Mila. Thank you. So I got into real estate about 12 years ago now. So during the last financial crisis that the world faced, 2008, prior to being in real estate, I was actually a salesperson with a company called Lenovo. And at that time, the market was undergoing some shifts. And so I just started looking into, what do I want to do next? What am I interested in? I was still quite young, and real estate was always something I was interested in. I actually ended up going to a conference, and the headliner on the conference was Donald Trump, and it was called the Wealth Expo. And I was just really excited about the business. I felt like I wanted to do it. And it was actually the main part. The trigger was when Tony Robbins was on the main stage, and he got a room full of maybe like 20,000 people jumping up and down, and that really it got to me. So yeah, I'm still doing it because it actually still gives me juice to this day. Like, I still feel excited when I get to do a deal and just work with people that I want to work with, and it's fun.
Clearly, you got a crossback from Donald Trump and from Tony Robbins, such an intersect.
Yeah.
And what's very obviously, it still keeps you going. And what's interesting, you mentioned that you entered your new industry in difficult time. Mm-hmm. Almost runs in my mind, because this is obviously, nobody can call this time easy.
Oh yeah, it was definitely scary times.
Right, at the best stretch of imagination. And that's why I think it's actually sometimes better to enter something new when it's difficult, because then you have many options which didn't exist before. Things start breaking. They're breaking apart, and you have more pieces of Lego to put this together. Mm-hmm. And then when market picks up, you already know how. So it's an interesting perspective.
And Mila, I want to know about you. How did you get into this? And what do you do? And how did you get to where you are today?
I focus on working with businesses, moving them through change, which is abundant. We are breaking through to the next level, breaking through and changing the ways it used to work and no longer works, like in real estate. This is exactly what we are going to speak today. And we don't want to overspend. We don't want the struggle and overwhelm. And there are things which are proven to fail. So that's what I am sharing with people, given my 20 years of experience. Now, how I got here, it's important for this conversation. My background, originally, I'm a scientist. And I did a lot of research, and I love numbers. I speak to them, they speak to me. So I love data. Yet, I always worked with people, and I consulted people. I helped them change. I helped organizations change. So it's a combination of ability to process a lot of data and figure out for me, and then share with others what these trends may mean and where we are going, whether it's in business or technology. I've done a lot of technology transformations. And whether it's financial, I truly feel this is a perfect time for people to figure out what makes sense to do next in business or in investing. And frankly, investing is, I think, on the minds of most of middle class people, whether it's about what the heck do I do with my retirement, whatever I see, what I'm going to invest next, and how to figure what's going to burst, what's going to stay, how to go through this difficult times. Because I think most of us realize that this is not the end, this is the beginning, economically and financially speaking.
I was thinking about you like on the way driving, and I was thinking this is the time where Mila is needed the most because there's so much uncertainty, and you're somebody that's able to provide the clarity and look at how can this specific situation be made better with systems and just analyzing information and figuring out, well, how do we get from here to where you want to be in a logical way, because so many businesses are being disrupted right now.
I must say that I was inspired to have this event first by a couple of friends of mine who literally called me a number of times and said, what do we do? Should we do this or that? How do we move, let's say, funds? I was like, guys, I'm not a financial professional. They said, we don't care, because it's not about how to position funds. It's about somebody who can actually put things together and put information together and process and help us process. I said, okay, then I'm going to do an event so I can share with more people. We will have two parts to this conversation. We want to hear your questions, your opinions, which may not be in agreement with what we are saying. And it's actually perfect. We do not have to agree. I just wanted to make sure that we have clarity. This is about solving for the puzzle which this very interesting year 2020 brought to us. Nothing works as before this year, as I said. And Frank knows much more about this, and he'll share with us stories from the trenches. Real estate is not immune. Where we are residential real estate wise, it's a bull market in the houses, it's a spring market in the fall, houses are in bubble. Where we are going, and we will be talking about the most powerful and foundational principle of economics and market. It's supply and demand. And we will talk about condos, which are dead. And then we'll have questions. And then the second part, we will focus on some aspects, very interesting aspects of commercial real estate. We'll speak a little bit about debt and lending. And finally, that question, so what? To buy or not to buy? Key things to consider. And with that, I would love to ask a question to our esteemed expert. So what the heck is happening in the residential market?
It's a lot going on, Mila. So I think everyone is probably observing it from their own perspective, and what's happening depends on who you are, where you are, what are you doing. There is obviously a lot of demand for suburban and larger housing, which makes sense. Like if we just think of it from the perspective of a user, if you were trapped inside your home, would you want to be trapped inside a box in the sky with elevators? Like the pandemic obviously makes sense that people want a backyard. People want to have their own space. People need more space because they're inside their space much more often than they used to be, right? So that opened up, I think, an inner reflection. Like people are looking in and thinking, okay, I'm inside my home for many hours a day. I used to go to the office. My kids used to be going to school. Now they're at home all the time and I don't have enough space. I'm uncomfortable. If you can work from home, does it matter as much that if you live 15 minutes from the office or 45 minutes from the office? I think if you can get more space for the same price or not, or maybe less, and you're getting maybe a nicer space, you get a little backyard, get a little bit of outdoor space where you can barbecue maybe and just drive straight in with fewer neighbors. I can understand the appeal of single family homes at this point. And
of course, houses make more sense. They do make more sense as well from the psychological perspective, because people feel more protected. And this is such a long period of time when people, especially in the beginning, they felt fear. And this fear factor is still creeping in. Sometimes for some people, it's no longer a fear of infection per se, but the fear of uncertainty and, okay, when it's going to end, what is going to happen to me, to my family, and of course, feeling more secure when you're having something tangible, which is on land. Psychologically, people, emotions are not driving this a lot.
definitely, I think it's really that, I guess the lizard brain. It's like people feel good if you put your foot on a beach and your toes in the sand, or if you're on some grass with your bare feet. There's a grounding effect, I think, that everyone feels when they're outside, or if they're on the earth. There's also that whole psychological barrier of some people not wanting to go so far away from the security of the city and all the interactions and the people that they can get in the city. But at this moment, they're not getting that the benefit of the city as much because of the shutdowns, and because the action being less, the restaurants being shut, everything that makes the appeal of downtown a little bit less at this time compared to what it usually is.
So can you share a little bit more? When we chatted, you mentioned that there is a feel almost like a spring market is here, although we're clearly moving steadily into the lowest, usually, time in the sales cycle in the market.
Well, we had a 2-month pretty much shutdown almost of the real estate market at the beginning of at the end of March, going to April and into early May. So there was a lot of uncertainty in what's going to happen. So people would generally in that time not take action unless they have to. So people that were already in this transaction cycle, so if they were caught in the middle of it, they have to obviously complete their contracts and whatever they have to do.
Mm-hmm.
But then the people that were uncertain as to what would happen, how deadly is this virus, what's going to happen, is the house prices going to plummet, they didn't know, so they hit the pause button. So I think that's why we're seeing, if you look at the year over year numbers, everything appears to be up. If you compare November this year to November last year, we're up in terms of sales and activity. But it's because we took a pause. So there is that delay of some people, they're doing their transactions now.
Very powerful. I must say that I fully agree. If we look at a certain point in time, then we may draw a conclusion which is wrong versus averaging out. Because
Exactly.
this is a big force, the whole market and supply and demand. It cannot be truly gauged in peaks and valleys which are short.
In many cases, people will just look at what is the average selling price. Is it up or is it down or what? But I think that's also can misconstrue things, because the mix of what's selling can change in a short period of time. Maybe more people are now looking at houses versus the condos. So it can really it can affect the average price significantly. So I think we got to look at things in specifics and break it down. But it does appear as though people are aggressively buying real estate now. And there's a lot of factors that go into that. And I think condos, that's another thing we can talk about too, is what's going to happen with condos. Yeah, I think people are seeking security, right? Like if you are in a feeling, like you said, if things are scary, where do you go to? You see obviously a lot of demand for things that are real, tangible assets like real estate. It's people are buying it, and they're paying a lot for that feeling of security, or that the home. Like people are really valuing their homes more than they were before. And I think it's also the whole supply and demand thing, like you're saying.
So yes, and here I truly want to dive into two different things: the temporary effect of pandemic, fear factor, and emotional buying, and the longer term trends, because there are short term trends which are driving things one or the other way, are what's happening long term. And we need to truly be mindful overlaying those two and seeing, okay, what does it mean for us logically if we kind of put emotions aside?
This is obviously right now this is my busiest area right now, is condo rental market. There's a lot going on. I've done more rentals in the past month than I usually do in 3 or 4 months. So it's just people are moving around right now.
This first bar, why I actually highlighted it, look at that. It's number of units listed. So we have 2.5 times more units than average in downtown. And for obvious reasons, we're actually going to go kind of literally go through these reasons. But the matter of fact is there is a lot of supply. What happens when there is a lot of supply?
Prices go down.
The price is going down. So this is a natural force of the free market. And actually, if you think about it, again, just let's put investors and people who own these condos aside, but people who are renting, this is a wonderful, wonderful period. And they're smart enough to recognize that this is a time to shop and move around because they can get a better space for less money.
Yeah.
So in that sense, although it's hard for some owners, it's good for a lot of people who will have their affordability, right, in terms of percentage, what they spend on the living expenses drop, which means that those people, and of course, it's not people mostly in service who, let's say, lost jobs right now, who are moving, it's professionals, but still these people will have more disposable income. And I will drive back to what I just said in the second part of the conversation. I've heard from quite a few friends who are investors, that's the time to run for the hills because the rentals are down and the prices are down. Who needs condos? This is really tough.
I think people who own real estate are generally very astute, and they've gotten to that point where they can own real estate for a reason. And I think when they see trends like that, when they see a massive spike in inventory, they'll dig beneath the surface and figure out why is that happening, and they'll look for the clues and think about, is this a permanent thing or is this a temporary thing? Do I want to liquidate this this piece of gold that I have because the value of it dropped a little bit right now, or what's going to be in the future? And I actually I look at it and think, okay, what is the effect of the pandemic, the travel restrictions on Toronto in particular? It's massive because we have a lot of amazing universities. Like we have one of the best, we have University of Toronto, York University, Ryerson. A lot of young people from around the world come to our country to attend these schools. And if you send them a note saying you can stay in your home country and still take your degree from home and not have to move here and still get your residency status, a lot of them will make that choice to stay at their mom or dad's house back home and then still attend university. So what happens to condos is, I think it becomes clear, a lot of less demand. There's fewer people coming. So that I found really interesting. And in looking at it, people obviously see when rent prices go down, people see that they're going to negotiate with their landlords to get a lower rent, or they're going to move or upgrade into something even better for the same price, or maybe just slightly more money and get something bigger and with a better view or whatever they desire.
In terms of sales, the larger condos currently sell better. And the first thought, of course, it's pandemic. People want bigger space. Yes, but this is a temporary factor. Still, what's interesting, what I noticed, it's a very small percentage of condos which are 2-bedroom plus. And as we can see, the prices, right, the average selling price is higher on these bigger units because the supply is smaller and the demand is higher. So larger condos are doing better as well, I think, totally for the very reason which you mentioned, when smaller units were rented by either travelers or students. This currently demand is down and a lot of people are selling.
There's also like way more smaller units when you look at just what the builders have been building. Because investors are a big portion of the purchasers for these new developments. So that truly family size sort of condo is very hard to find, and you're not going to see the prices decline on those massively because it gets to a certain point where you can rent a house, you can buy a house if the margin is too much different.
So in the condo rental market, looking again at supply versus demand, we do have 250% increase in downtown of units listed. The rented units is 30% more. The number of transactions is increasing, but it's 30%. So can you imagine how much more? 80% of the inventory is still remaining. So this is a temporary, that's the key thing, down pressure on these prices. There are two options for people who own those condos. If they can carry, it makes sense to carry. If they cannot carry, then obviously they have to sell, but they may be better off selling later, not now, because again, these down pressure is temporary until the ban on travel, etc., is lifted.
And I think people are taking that sort of approach, thinking, what do I do? How do I sustain this? And you have people sitting on a big pile of cash. So a lot of the investors have equity positions, so they're maybe not as worried about a few months of vacancy versus potentially selling into maybe lesser value than they could potentially get. So it's a trade-off, and I think and even a lot of the banks were giving deferrals, right? So I think there was options for people that maybe were in negative, maybe difficult scenarios. They could ask for deferrals, and we saw that whole talk of the deferral cliff and all that. That's hasn't really necessarily materialized into massive insolvencies or any of that stuff.
The condo market clearly became better supplied because, as we've talked, the short term, there are 5 factors. The first one is the short-term rental market. Regulations kicked in finally in Toronto, and obviously a lot of units went on longer-term leases, so that's extra supply. And then there is a whole bunch of COVID-related factors: drop in tourism, drop in immigration, drop in international students, and coincidentally, 2020 is the record year of new units completion. So we had a lot of unusual supply from completion, and we had a huge drop in demand. So those two forces coincided and created a marvelous opportunity for renters and a temporary drop in prices and lease rates, because the only one, if you think about it, the only factor of 5 is short-term market regulations. Once those units are either sold or filled with renters, supply and demand equilibrium will continue its trajectory up. I mean, supply is under pressure, demand is growing. And if we think about, I'm not sure how much of that will materialize, but with the new government agenda and a quota of bringing in 400,000 new immigrants next year, which is unheard of. And it's for obvious reasons. I'll get to them in the second part when we discuss economy. Are clearly the demand is going to come back even stronger than before. So we have 10% increase in sales, we have 8% increase in price, and we have a huge number of active listings. It's almost more than twice. So we have a twice oversupplied market, and the bloody prices still increased 8%. What does it tell you as an investor, as a person who owns this?
Not to sell, pretty much. Like, I guess unless you have to, right? It's gonna, that's what it would tell me. That's why I've been telling people not to sell at this time unless they have to, right?
Market, ultimately, it's a sum of people. The way how we approach certain things, the way how we value those things, that's the price. So people in general decided and priced condos still as an attractive investment, despite of all these 5 factors which should have brought prices. Frankly, I would expect with all these factors, prices should have been 25% down.
Well, I think it's going back to what I was saying earlier. It's the average price is somewhat misleading because the mix can be different, right? So whereas before, maybe we had a lot more 1 bedrooms and 1+ den selling, now we're getting more 2 bedrooms, like you were saying. That really does skew the average price up. That's why it doesn't make sense sometimes. When I thought at the beginning that oh no, what's going to happen? Are the prices going to drop 25% like you said? It turns out it's resilient. It did drop a little bit, but not anywhere near the level you might expect during one of the worst financial crises in our generation.
Now we are turning to houses in the
Mhm.
same area, which is mostly Toronto, as you rightfully said, Frank. There were no transactions, or they dropped like 3 times in April and May. Mostly, as he mentioned, probably are because of completions. But then look at here. So a lot of spikes. Yet on average, we are having in the market the same number of sales.
Mhm.
They were just deferred.
Exactly.
That's all.
Yeah, they hit the pause button basically.
Exactly. It's a premature thing to say that the market is hot. No, it's average. People need to move. They couldn't move for a few months. Now they started. That's all. Now, in terms of listings, same story. It wasn't enough listed. Now it's a little bit more. And if we average it, it pretty much comes to the same number as last year. So we are doing pretty balanced in terms of average. There is no heat in the market. Activity, which means this is the famous sales to new listings ratio. Same type of indicator exists in stock market. And I actually find lately that there is a lot of similarity between stock market and real estate market, although obviously properties are significantly less liquid. And what is interesting that historically, 2019 and 2018 were the years which I bet overall, if we had more years, it would show up. They were a bit abnormal. There were a lot of sales versus listings in November and December. So maybe at the end of the day, 2020 is not that different, that we are seeing a lot of activity now, because for some reason people started shopping more around Christmas.
Yeah. Well, people, everyone I talk to, they're on that realtor.ca app, just they're at home surfing for homes.
And partially, again, it may be our psychology. When there isn't much to do, people start thinking about, oh, well, should I renovate or should I buy a new thing?
Yeah. I've been noticing a lot of, I heard Home Depot sales are up. They're growing because a lot of people are doing that approach. So let's improve our bath. Let's remodel this. Let's do that, rather than taking the approach of moving.
Now I wanted to talk about the real factors behind this whole thing, because market works as long as there is money. There is money in people's pockets. There is money which banks are willing and able to lend. And the interest rates make sense. All of that ecosystem is working.
So it's almost like that whole shutdown obviously destroyed the Q2, like that April and May couple months where people were terrified or whatever was happening. Now, like it's
almost back.
There was a lot of stimulus that went into that to create that 40% rebound, but
Exactly.
It is
perfect timing that you said it. Now you can start seeing that it does make sense for tangible properties to continue appreciate when whatever we dropped, we seemingly, again, for now, temporarily gain back. So things are almost back to normal to certain people who still have employment and who still have jobs, and they can shop around. And obviously, we do have some employment growth in September, and we have unemployment dropping. Well, it was in the fall, obviously. Right now, the numbers will be skewed, but the point is that the economy seemed to be so far pretty resilient, which helps people to make longer term decisions like buying.